Under TSA liquid rules, what is the maximum size you can have of a liquid in a carry-on bottle? Within 1 ounce, it's 3.4.
Did you also know that you can take any kind of frozen liquid as long through TSA? So like if my wife wants Gatorade, you can freeze it and you can bring it with you and then it's fine. I had no idea.
I feel like you're setting me up to get searched.
Yes.
Like you're giving me a life hack that's ultimately going to lead to me getting pulled aside.
That's right. That would have been a good idea. Yeah, I like that idea.
Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well liked and respected by all your peers? We can't help you with that. You come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing! Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your tormented tax preparer of a host, Tyler Otto, and I'm joined by the blissful bookkeeper, Jeremy Van Grohl. I mean, this should be your easy time of the year, right? You're not doing taxes like the rest of us suckers.
Do we have an easy time of year as the firm owner? I don't feel like that happens.
But when I wrote these intros, the blissful bookkeeper, Jeremy, I mean, I wasn't ready for you to come in as the salty sailor today, man. You've had one. What's going on?
I am salty today. So like putting together our team retreat. So I think you guys have done this before, and the in-person time is so valuable, right? Like you build the relationships way better than you do anywhere else. So something I very much value. And I think I've said it before on here, that moment, I've typically been the last one to show up there. The moment I show up and there's 15 people sitting around talking, laughing, doing all that stuff, and knew I had a part in this makes me feel amazing as a business owner of like what we created. But like I had this in place. We're going to be traveling to the East Coast together. We had 2 locations booked right next to each other. There's 15 of us. And I just got an email today that the property owner canceled our reservation today on one of the properties. So like,
Dude.
I don't even know what to do at this point. I am just like, first of all, I didn't know you could do that. Apparently you can. And I am just salty on now how I'm going to have to throw this back together and whatever. Yeah.
Okay, so I felt the pain recently of trying to hire new staff. And it's amazing how many people don't consider all the costs that go into being a firm owner and just like supporting staff and then getting them together. Like, Jeremy, easily, I'm guessing you're spending over 12 grand easy on getting your group together.
Oh, yeah. Yeah. I think we've averaged 15-ish over the last while. Yeah. Yeah. Agreed.
Yeah. And that's not a small expense. And that's just getting the team together once for a couple days. Now you get a surprise bill of having to figure out a new location. I'm sorry, man.
Yeah. Right. And like as a business owner, if you wouldn't do this, that would just go in your pocket, right? Like I'm just gonna get that money, but it's so valuable.
But you and I are like Boy George. We love our culture. It's just,
it's like a club.
It's worth it.
Yeah.
Jeremy, I was about to go into a game, so I'm already off my groove now. But you've got some news this week.
I didn't even have a news. This is just ancillary comment, but like, hey, 9th straight year, PwC should be proud they didn't screw up the Oscars, right? Do you remember that where they had like the wrong envelope that they gave to
Moonlight La La Land?
Yeah,
shenanigans.
Oh, I think it was Warren Beatty that would like gave it. Oh man, that was just...
man, good memory. Dick Tracy, man. Now I'm gonna go watch that movie. Warren Beatty. That's all I think of when I see him.
Oh yeah. So yeah, congrats PwC. Way to nail it 9 years in a row.
Well, we teased it last episode, Jeremy. But I mean, into news, I am so friggin' excited. I'm riding high today because I had a talk with the Scaling New Heights team. Just all of our listeners, both our listeners, come to Scaling New Heights because Monday, we're going to be hanging out on main stage having some fun with the Scaling New Heights crew. So, dude, I am pumped for this show.
Yeah, that's going to be exciting. And I think like something people haven't seen before at an accounting conference is us, right? Like, and what we do, and it's going to be super fun. So yeah, be there. Other shenanigans. I know we probably have the first week in when this one drops, but we are doing the March Madness Accounting PETA edition. So if you haven't seen this, get out on LinkedIn or come join our Facebook group. We have ranked 64 of the top pain in the butts that we experience as accounting, and we want your help to figure out what is our biggest pain in the rear as accountants.
I absolutely love it. All right. Well, come join us. Find us in the Facebook group, LinkedIn. Jeremy, dare I just say, let's jump right into our first game this week.
Let's do it.
So, Jeremy, you know I'm on a never-ending quest to either break your spirit with tax information or turn you into one of us. One day, either one of them's going to happen.
I thought you were my friend, man.
Isn't this what friends do?
Yeah, it's true.
Isn't this what friends do?
This is what good friends do.
Iron sharpens iron.
Yeah, okay, friends, like just be nice to each other. Good friends harass each other. Yeah.
Amen. So with that being said, I spent a lot of time this week prepping trainings for my team and Firm Foundation about Section 179 depreciation, bonus depreciation. So Jeremy, I wanted to play a game today with you that I'm calling Feeling Under Depreciated, where we're going to force some education on you about two special types of depreciation methods. How excited are you on a scale of 1 to bullet to the brain?
Like, give me the roulette or the Russian roulette thing now. And disclaimer, it never makes sense for a nonprofit not to just do straight line depreciation. So I never deal with this because it's so stupid. They don't pay tax. So this will be
Keep
fun.
it easy, straight line for nonprofits, all day, every day. Wholeheartedly agree. All right, let's jump into it. So, Jeremy, we're going to learn along the way. But again, everything here, for those of you that don't know, terms I reference, Section 179 depreciation, it's called that because the rules are laid out in Section 179 of the IRS code. So that's why we call it that. We're not original here when it comes to accounting. And bonus depreciation, which is all the rage since 2017, every single tax bill we roll out. So we're going to talk through both of those. And when I reference makers, for those that don't know, you're beginners, that's the modified accelerated cost recovery system. That's just basic regular depreciation, right? Straight line depreciation, we call that makers. So just so you have your terminology. All right, Jeremy. So first off, for our company, UnAccountable, I bought the Oscar Mayer Wienermobile. And when I was choosing to take special depreciation methods like bonus or Section 179, that asset must be used over what percentage for me to take those special methods? Is it 0%, 25, 50, or 100?
I'm going to go 50.
Well done. Well done. Already avoiding the shutout. Yes. So these special methods, their intention is to help us take a greater expense right now, reduce our income, and pay less taxes now that normally would be expenses we'd have to take later on. And Jeremy, would you rather have $1 today or $1 in 5 years?
Because inflation, man, you want that dollar today. Yep.
You want to be able to earn the interest. So that's all we're doing here. And with Section 179 depreciation, which is just some cool rules where we can take stuff early, everything over 50% business use that, we'll get into their life values can be taken. And for bonus depreciation, if it's a listed asset like vehicles or computers, it has to be over 50% as well. So well done, Jeremy, avoiding the shutout.
Yeah, I love it.
Question 2, which of the following items can I use bonus depreciation on in my business? A movable storage shed that my wife owned. It was a she shed. That she owned it before we started the business, and then we sold it into our business. Is it a truck that I purchased from my dad? Is it a sauna that I purchased from my brother? Or a large piece of machinery I bought from a different company I own? Which of those can I use bonus on?
Oh, I don't like any of these options. I'm going to go the machinery.
Incorrect. So I tried to throw you off with asset types. I'm going to give you one more shot at that. The she shed, it doesn't matter. The truck, it doesn't matter. The sauna, it doesn't matter. But one came from my wife owning it before the business. One came from my dad and one came from my brother.
And is it your wife then? Because you're the close family? What?
No. So the only one I can use this special depreciation method on is the one I bought from my brother. There are two rules that come into play with special depreciation methods. You can't take Section 179 or bonus if either A, the prior use rule applies, which is converted personal property. So if I already owned it, or my wife, because we are one taxable entity, I can't then roll it into the business and then just say, "Yep, I bought it for myself. Now I'm going to take these special depreciation methods." So it can't be a converted personal property.
Okay.
My wife disallows it, and plus it's a she shed. So I mean, how am I using that in my business? I don't know. Second up, Jeremy, you can't have it coming from a related party, and related parties include direct ascendants. No, ancestors, not ascendants, ancestors, and direct line dependents. So my kids, my parents, if I bought it from any of them, or a company I already own over 50% of, so it's already mine. That's a related party. Can't do it, but my brother is fair game.
That is so ridiculous. Like, how is your brother less related to you than your father?
I don't know, man. But here's what the interesting is, because people always try to do this, right? You start a business and you roll over your entire personal life, and now I'm going to take bonus on it and expense it all this year. The IRS is like, yeah, no, we're not allowing that. Or, hey, I'm going to buy it from dad and then I'll just take it. And it's like, again, no, you're not getting out of, inheritance gains, what's the word I'm looking for?
State tax?
Yeah, estate tax.
Yeah.
Inheritance tax, whatever. There's a word I'm looking for. I'm really struggling. Do you feel like you got knowledge forced on you yet today?
Yes. What in the special case that if should your parents have come to an untimely demise, that your
Hmm.
brother has legal custody over you? What do we think then?
I would guess your brother would have to pay the estate tax, the inheritance tax, and then you could buy it from him.
Okay.
Sam's getting his cut somewhere, man.
Yeah, right. Oh man.
Gift tax, that's what I'm looking for. All right. Question 3, Jeremy, out of 6. When Unaccountable inevitably purchases our 4 matching mopeds this year for business use, and we want to take advanced depreciation on only 2 of them, which of those methods can we use? Can we take bonus depreciation, Section 179, neither or both?
I'm trying to figure out
We're going to depreciate only 2 of our 4 mopeds.
who gets the other 2 mopeds. Is it our wives or our moms?
Probably both our listeners, so moms.
Yeah, okay. Bonus depreciation on those.
Mm. So bonus depreciation has a nifty little rule that says if you take bonus on one type of asset in that class, so say vehicles or computers or building improvements, you have to take bonus on all in that class. Where Section 179, you can just pick and choose. You can just be like, yep, I'm going to take that little one. And so Section 179 is fun because you can look at your net income and be like, let's find the assets to get us down to the number we want. Where bonus, it's like taking a flamethrower to the problem, right? Like Section 179 is the weed eater and bonus is the flamethrower.
Interesting, and I love how we can manufacture our net income using this. I love it.
Yeah. All right, Jeremy. So also, as you know, Unaccountable, we're going to make $1,000 in profit this year for the first time.
Is that a true statement? Or-
No, but for the scenario, it is.
Oh wait. All right.
We decide to take special depreciation on said mopeds, on all of them. Which depreciation method will allow us to take our net income down into a loss? Is it bonus, Section 179, neither or both?
I'm gonna have to think. There's some logic here and say neither.
Ooh.
Ugh.
So bonus depreciation, we can go below 0 and take losses and report, have that negative income offset other income at ordinary rates. Meanwhile, Section 179, it cannot take you below 0. So you know how we pick and choose?
Yeah.
You pick and choose until you get to 0, and then you're stuck. Can't do anything else. But you can take bonus after you take Section 179, so you can get to 0 with Section 179 and then go further with bonus. Yeah.
And you can apply these like bonus depreciation and Section 179 to assets that you have in the current year as long as you're following. Really?
Yeah. There's a lot more rules that get into this, like you can't revoke elections and it's hard to amend things. So, like, there's a whole lot we're glossing over. But I think this is fun, like reminders for the tax preparers right now.
Yeah.
2 questions left, Jeremy. Based on what you've learned so far here today in your forced fun, what is best practice when it comes to applying these special depreciation methods? Between Maker's Bonus and 179,
Okay.
do you apply them in that order? Maker's Bonus 179, 179 Bonus Makers, Bonus Makers 179, or 179 Makers Bonus? How would you apply that?
I'm going to go 179 bonus makers.
Well done. You were listening because, as you said, you can take that loss surgically with 179 down to the number you want. And then if you need that flamethrower just to get below zero, take it even further, take losses, you can. And then if there's still extra depreciation you can take, that's when Makers kicks in. But Jeremy, I ask you this question at the end of it all, true or false, it will always make sense to take accelerated depreciation methods over just straight line makers.
You said always, so I'm going to say false.
Man, that is. Oh, wait, sorry. I hit the wrong
Oh,
button.
I was like, come on, man.
No, that is testing 101, right? If there is an always or a never, you avoid it. So here's the biggest problem I see. So, Jeremy, I don't know if you know this, but most tax prep softwares, and I think it's all of them, but bonus is automatically selected. Like you opt out of it. And then section 179, you just decide what you're going to take. There's no election to take it. You just put it on the depreciation form. I'm taking this. The biggest problem I see is the tax software will just try and automatically apply as much depreciation as possible.
Yeah.
Now, here's where I struggle with that because most tax preparers, there's no strategy in that. If I have a client and I have a lot of hotels, as you know, year one, they lose so much money, right? They're getting things off the ground. They're still getting customers. They're establishing a client base. And like, even if you take a loss to offset from other income, they're usually in a low tax bracket year one. And so do you really want to offset those losses against, when they're at a 10% tax bracket versus save those losses for next year and offset against income that might be at a 24 or a 32% bracket? Regardless, my argument and the biggest issue I see with tax preparers is that they don't tell the client, hey, here's what we're doing and why. Like, we think you're going to have the same income next year, so we're going to take it now. Even if it's a system default and you don't have to do any work, tell them you put a brain cell to it, and that's advisory. That is you coming in and advising them. And then if you think like, hey, if you guys think you're going to have a lot more income next year, maybe we don't take these accelerateds. But my biggest advice to anyone listening that's doing tax returns, tell the client, even if you didn't have a brain cell in your head, manufacture advisory by saying, hey, here's the implications. You're welcome.
Right. So follow-up question. So based on all these depreciation amounts, you're going to get a total depreciation that should be in the P&L on their 1120 form or whatever it was. You see me dropping form names? Oh,
Yeah, you are.
yeah.
Maybe throw a 1065 in there.
Yeah. And then, obviously, this is not in the books when they're doing it. When the tax return is done and filed, if you're doing their books as well, you are going to go and post this depreciation in the books. So their 2025 P&L will match their 2025 tax filing. True or false?
It depends.
Oh, God.
I know. So here's the problem.
Yeah.
Okay, so my argument for most small businesses, the book should match the tax returns.
Yeah.
And there's actually some depreciation rules where the IRS requires book conformity rules. So if you take this, it has to match on the books. But Jeremy, if you remember back to school, there are 3 types of financials. There's, the investor level ones, there's managerial books, and there's tax books. We do have clients that we keep straight line on the managerial books because it impacts management fees and overall performance that gets reported. Because if you have a management company and the management company gets paid out based on percentage of net revenue generated, we keep managerial books on straight line, but then we make the tax adjustments later on and keep those separate. But for most of the small business owners, if you're not in my space where it's like real estate companies and hotels and management firms, yeah, I agree with Jeremy. If you're a nonprofit like Jeremy, yes, go make the books match the taxes all day.
And I would argue, you know, when we set up books, right, net operating income is what I want them to base everything on, right? Not, and then depreciation comes after that for net income. So like I would tell my hotel people is like, why are you incentivizing on bottom line? You should incentivize on that operating income. That person had no decision in your interest expense and when you decided to borrow money or make capital expenditures. But yeah, okay.
Yeah. No, I 100% agree. Like, we love to see management contracts based off net operating and not net income. Also, because of like things like real estate taxes. Like, management companies have no control over that number. So, yes, wholeheartedly agree. But for us, we keep managerial books separate from tax books sometimes.
Right.
So, there you go. Forced fun. All right, Jeremy. How did you score? I don't even know. 3 out of 6. Well done, sir.
Better than I thought I would.
Let's be honest, most of us didn't become bookkeepers or accountants to spend hours learning marketing systems and chasing leads. Heck, some of us became accountants because we didn't want to talk to people. We did it also to serve clients and build businesses we love. But what if you could get better clients without the marketing overwhelm? Well, that's exactly what Keepable does. It's an all-in-one marketing system built specifically for bookkeepers and accountants. And it works 24/7 behind the scenes to bring in leads, book consultations, and automate follow-ups. You get a professional website, branded consultation page, and follow-up automations all tailored to your business. No more duct taping tools together or hiring expensive marketing teams. If you want to grow your firm with ease and attract better clients without doing more work, go check out Keepable today at keepable.com or follow the link in the show notes to give us a little bit of extra credit with the folks over at Keepable.
And already, with that noise, we're at halftime. What are we taking a bite out of today, Jeremy, as our app snack?
So yeah, going a little bit off our typical beating path on this one, and we've talked about this before, never reviewed it before. I thought we talked about Marco Polo, right? So
I'm down.
Yeah, an app that we both use, and honestly, I'd never heard of this probably 18 months ago or so, but I kept hearing my wife get like these little weird ding messages, and I was like, "What is that? What are you doing?" Because my wife hates technology. And she's like, "Oh, I'm using Marco Polo and I'm talking to my best friend in South Dakota and all this." And I was like, "Okay, cool, whatever." Never thought of it. But then through our friend Kirsten and my friend and our rock star VA Joss got plugged into this. Marco Polo, what it is just an easy way to send short video messages to each other. On hold on, we'll get to that. Just to share and like get FaceTime with friends, right? So think about short video messages. It makes it easy. You can set up groups. You can do pictures on it, emojis on it, all of that stuff. And for their base model or base package, it is free, right? And I think there might be a time limit on it or whatnot, but yeah. And the reason why we laughed is though we love her, our friend Kirsten loves to send 5-minute messages, and which I'll get to the next part is that for the free version, you have to just watch the 5 minutes or whatever, but they do have a paid version where you can speed it up to 3 times and have it go much faster, much like if we're watching a SOP video or something to get through the material a little quicker. So I do have the Plus plan. I think it's $80 a year or $10 a month or something. So when Tyler's on there, I like to put it at about 1.5 times, give or take. I get through that. And then Kirsten comes on and shoot it right up to 2.5, 3 times to make sure I get all the things. But yeah, I just think it's a really good communication tool. And if nothing else, it helps us. Like we have a group of 4 of us with Kirsten and our friend Cheryl in there that we connect a lot and very often in that to complain about things, to ask each other questions, to give updates, all that stuff. A great tool to stay connected with people.
Here's my argument is, so often we hear the importance of having a community while building a firm.
Yeah.
And you and I were both on webinars recently with bookkeepers.com talking about, going to conferences, finding community. And a lot of times, if you want to find the community, you either got to work hard to infiltrate it, like what I did, or you got to create it. And this is one of those ways that none of us have time for extra meetings every week to get on a call and do a mastermind group. But you find your people, something like Marco Polo goes over great. And who knows, you may get friends like, Jeremy, who, we're sitting there and going over Marco Polo, talking about how we're going to do Scaling New Heights and how I'm going to be a straight man. And his response is,
"You're going to play a straight man?" Do you have the acting skills for this? You gotta practice.
Thank you, Jeremy. That's what friends are for.
Right. I love it. So
All
yeah.
that being said, it's a great tool for your community. Honestly, when I have stressful days talking about the business, my first thing my wife says to me is like, "Do you need to go message Jeremy about this? Because no one's going to understand it the way you do."
Right. And even like my son joined like a private soccer group, and they use it just to send motivational stuff back and forth. They're like, "Hey, I checked out this skill." So it's really cool even beyond business stuff.
So, not accounting specific, but honestly, Jeremy, probably one of the most number one tools you and I use. So, I am all for it for being our app snack for the day.
All right, then let's get into another one. And I kind of played off of your segment last time, saying that's some BS, digging into a balance sheet account. So we're gonna do that some BS accounts receivable edition.
Ooh.
So we're gonna have Tyler's toddler teethers, because he makes teethers for toddlers, and he does a lot of invoicing. So we're gonna talk about some account receivable questions and dig into that. Are you ready, sir?
Not at all, but hey, let's go for it.
All right. So, question number one. So, just thinking basic recognition of things. You have these teethers and provide the services and everything in December, but you invoice the client on January 5th, and then the client typically pays in 45 days.
Yeah.
What should be recorded on December 31st? Is it A, nothing until the invoice is issued? B, posting to AR, accounts receivable and revenue? C, AR and deferred revenue? Or D, AR and unearned revenue?
So, did you tell me my accounting method?
No, like accrual, right? Accrual, yeah, accrual accounting. All accrual. Good call. Yeah, good call. All
Okay.
accrual.
So, if the services would perform credit revenue, debit AR.
Correct. Yeah. So, simple matching principle, right? Revenue is recognized when it's earned, not when it's invoiced. Okay. Nice.
Agreed.
Do it out of the gate. All right. So you have $1 million of accounts receivable, and you're estimating that 3% of that will be uncollectible. Quick math, how much are we talking? Ooh.
$30,000.
Perfect. $30,000. All right. So you realize this. What adjusting?
I'm taking a point.
Oh God. Give me points. What adjusting entry is needed because you realize you have uncollectible accounts? So do you debit bad debt, credit allowance for doubtful accounts, debit AR, credit bad debt, debit allowance for doubtful accounts, credit bad debt, or no entry until the specific accounts become uncollectible?
I guess that's a good point. Wow, I am not confident in this answer. In my company, I would not write off the I would not expense the bad debt against AR. Like I would expense bad debt and then credit AR to reduce it, saying it's not due. But I'm guessing you're going to hit me with some sort of knowledge of like I can take the expense now of bad debt and then put it as allowance for doubtful accounts and then later offset those two. So I'm going to say debit bad debt, credit allowance.
Correct. Nice work.
Whew.
And
I don't do that.
I agree. Yeah, I don't do that either. That's why it's a good refresher for me kind of digging into this, because we don't do a lot of invoicing. And I have a lot of clients that do a lot of invoicing in the nonprofit world, right? But yes, but we do get through audits, and we have one or two clients that do invoice a lot, and they're like and there's a lot of methods to do this based on historical averages, or you can do specific clients and estimate amounts. You should book a bad debt expense and then allowance right away when you know that a certain amount won't be collectible.
You know, this feels like some of those things, though, that you could so manipulate the data. Because, like, we're doing accrual accounting, and then I want to get my revenue down this year. So I'm just going to say, I think these ones that I've already recognized the revenue, I don't actually think they're going to materialize. So, like, I'm really curious, and I know you haven't done the research. I don't expect this of you. We don't have the budget for that. But, like, are there guidelines to say, like, what can I go in and just, arbitrarily say, yeah, this is bad debt. Like, I'm going to put it as a credit on my balance sheet and then just hold it until later. I don't know.
Yeah. I think a lot of this can be manufactured. I'm assuming you have to, especially like public companies, have to have some kind of consistent pattern of doing it, or you need to write up why you changed it and how you changed the method. which again is one of the reasons I got out of a public firm, because we play these games all the time. Like, oh, can we do this? Can we change our bad debt expense? Can we change our vacation accrual calculation? So
It was just like last week when I was talking about gift cards, because people will give out all these credits and then debit. They gave them away for free, so they'll debit discounts right away. And it's like, no, you can't do that. So yeah, these feel like games to manipulate.
yeah,
Ugh.
yeah, agreed. And the next one, I'm not honestly 100% confident in my answer here, so I'd love to debate this a little bit with you. Folks, let's say you have that allowance booked and you have an invoice that is actually defaulted on, then what type of adjusting entry do you make now that you've had the bad debt realized, like come to fruition that they said they're not paying it? I do have options, and what if you want to think? I don't think my options are going to help.
No, because assuming my first answer was correct, of we expense the bad debt and credit allowance, you would just credit receivables and debit allowance. You'd wipe those two out against each other, reduce your accounts receivable, and just say, yeah, it's gone.
That's correct, and that's what I got
Okay.
from my research too. But then, like,
It's like I know things.
if you, yeah, right, isn't that good when we get one right? Be like, oh, I do know
I know.
accounting. It's fantastic. But then, like, couldn't you make the argument that if you invoice regularly and have a consistent amount of AR, give or take, like people are ordering 100,000 teethers every month, so we're doing $1 million in AR, and
Oh yeah, my teethers.
that you have historically said you're going to lose 3% of that. Shouldn't your allowance be consistent and stay at that 3% because like you're regularly invoicing?
I mean, it makes sense to me. I am willing to bet there are some IRS guidelines, because so many people have tried to manipulate the game when it gets to, millions, $1 million. I'm betting there's a rule out there. I don't want to speculate in case the earmark bot makes a question off of me and cites me coming up with crap.
Yeah. It would be like an AI query that it ties into all the earmark things. Oh, yeah.
Yep.
Okay. Yeah, interesting. All right, question 4. So now you're invoicing for a huge job you have out there, $100,000. Doesn't matter the amount, whatever. And a third of it is paid up front. 1/3 of it's due in a year, and 1/3 of it's due in 2 years. They made some really good terms when they were doing this contract. What are the accounts that will all be impacted by that transaction when the sale happens? Accrual accounting.
Okay, but we did the entire $100,000 invoice as one invoice. Why are we doing it as one invoice if there's 3 dates?
Just play along.
Okay, the real way is you should be making 3 invoices here, folks.
Yes.
That's the right answer.
Yeah.
Okay, because they all have different payment terms as we've described in the contract. But I'm going to play along. One invoice that's going to get 3 payments. The invoice then is going to debit AR. So the credit needs to go to 1/3 revenue, 2/3 deferred revenue, and then you're going to do a journal entry along the way to debit deferred, credit revenue when that second part comes in, and then another one of those to recognize the last part when it comes in. I'm not even waiting for you.
I will give you a partially correct answer for that one.
Oh.
Because the other account that should come in play here is long-term AR, because it is due after a year. So you may not have this, but we actually have this in the nonprofit world. Well, they will give us commit to a 3-year grant.
Okay.
And based on accounting rules, when that grant is signed, you recognize all the revenue right away. But you have both the short-term receivable and the long-term receivable out there until the cash is received.
Really?
Yeah.
Because I imagine in for-profit, there's no way you recognize all that revenue up front. You recognize it based on terms and work completed. That's construction accounting 101, right? Like you recognize as partial completion. But I didn't realize like there are requirements for long-term AR. Because I know on liabilities, right, you've got long-term liabilities and short-term liabilities, and you have to call those out separately, 1 year or less. But I've never seen that on AR.
Yeah.
Huh.
Blowing minds. Dropping knowledge.
Yeah, you are.
Yeah.
All right.
All right.
All right.
All right. I got 2 more, I think, quick ones. Well, this one maybe not. So let's say you're factoring. What's factoring? If you want another, give yourself a little bonus point.
No. Am I confusing factoring with a sheeting? Aren't they like similar?
You're full of a sheeting. So that's where you engage with another company to collect your receivables actually for a fee.
Oh, it's the inverse of a sheeting, right? Because
Yeah.
a sheeting, you have someone else's money, you give it away. And then, yeah, factoring is the reverse of that, just on the AR side. You're saying, hey, someone else go get it.
Yeah.
You're selling
Right.
it off.
So yeah, factoring is when you sell your receivables. Most times, right, you send them the receivables and they pay you between 70 and 90% of them right away, saying, here's what that is. And then after they collect them all, then you get the remainder of it outside of like a 1.5 to 5% fee is that they keep for their services. So benefits like you get the instant liquidity, you don't have the collection risk, you outsourcing your collections department, all that stuff. That's what factoring.
Okay.
All right, one more. So now we're thinking about terms, right? So you're invoicing, you have terms out there.
Yes.
You're contemplating offering a discount term. So you're doing net 30, you want to think if you want to get your cash in sooner, thinking about doing like 110 net 30, meaning they get a 1% discount if they pay in 10 days. The net amount would be due in 30 days.
Yes.
Which of these factors would typically not be considered in this decision? Your average days to collect, your cost of capital, your allowance for doubtful account method, or the quality of your collection staff?
I'm going to go B.
I'm going to go wrong.
Okay.
Your allowance for doubtful account method shouldn't make any difference, right? On the terms you're going to put out there, on when you're going to say things aren't. Well, I guess in maybe. Now that I think, like,
Okay.
it's a stretch. But the one you want called out is the one I want to talk about, like your cost of capital, right? So if you are giving this, so like let's take this from the other side. If you are offering this 1% discount, right, and you use the terms that I'm saying, is they are more or less, you are offering your vendor that 1%. It comes out if you do an effective annual rate calculation, which I'm not going to get into, but more or less they're getting an 18% loan to, like, that's what that costs them, is like by paying faster and you giving that discount, their cost of capital would have to be higher than 18% to make it beneficial for them not to take advantage of this, right? And that's why I don't know if you have clients that do this, but like always take the discount, because you're going to end up paying late, like way less, and it'll be so much better, more beneficial to your bottom line, unless you can play Tyler's depreciation games. Okay, always take the discount when there's that. I was a credit manager for a while and had to like hammer this into people. It's like, no, we're taking the discounts. We're not offering them. Do that because cheaper is better. We can get cash for cheaper than that, what they're offering us for that extra 20 days of a loan.
Yeah. I mean, so I've got several construction clients, HVAC, whatnot, that just have ended up with me. And just trying to convince them any sort of methods to save money on the AR game. But a lot of them are still doing after the fact billing. And I keep telling them, like, dude, you got to collect 25% to schedule, 25% to start, 25% on midway, and 25% on completion. And dude, getting GCs to do any sort of proactive invoicing is brutal. So, I mean, if you have stats we can put together on this of like, hey, how to structure this and what's worth doing of offering a 1% or not, like, oh man, people need this.
I'm not taking an assignment out of this. I'm sorry. But yeah, that is
Yeah.
awful. Why wouldn't you? Like, even just think about tax work. Like, would you engage with somebody right now without getting a deposit at least of some amount?
No,
Hell no.
no.
Yeah.
Literally, to get on our schedule or to get a meeting with me to do a tax strategy, it's $1,500 to get started. And bookkeeping onboarding fee to get on our schedule to onboard, $1,500 to get going. Yeah, man. No, there's no way we do any of that. And I still think of a sales call I had this year where one lady, she got on, she's like, I have all these questions. I'm like, cool, that's what we do in tax strategy. And she goes, well, no, I can just ask them now. I'm like, no, that's what we do in tax strategy. You mean I have to pay to get answers? Yep.
Yeah, you do.
What I'm saying.
Right.
Yeah.
Nice. All right.
Good game.
Yeah, I think it was 3 out of 7, I think. Pretty good. Yeah.
I'll live with it.
Yeah, we'll take it.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
I am so excited to run you through this one. Jeremy Van Grohl, are you ready?
Let's do it.
In 1975, How many more times did the Eagles suggest you take it to the limit?
1.
What is the limit on how much you can contribute to your company sponsored 401k this year within $1,000?
7,500.
What is the highest speed limit on any stretch of road in the United States?
80.
For calendar year 2026, what is the HSA contribution limit for family coverage?
2,300.
What is the blood alcohol content limit in the state of Utah for driving?
Ooh, oh god. Way lower than Wisconsin.
So federal is 0.08.
Okay, I think that's Wisconsin is too. Never been there, thankfully. 0.03.
Under FLSA, overtime generally kicks in after how many hours of work a week?
40.
Under TSA liquid rules, what is the max limit size of carry-on liquids in ounces within 1 ounce?
I think it's 3.
As of right now, how many CPA exam sections are there possible to take?
Possible to take 5.
How many vehicles can a business have before it is required to use actual expense method and can no longer use mileage?
We'll go 5 again.
Within 25%, how many possible March Madness brackets configurations are there?
Oh god. It's like a quintillion or something. I'm going with that. I don't even know if that's a real number.
Well done, sir.
So listeners, we always take a second afterwards and actually score each other on these so we know if they're right or wrong. And it's always a good thing when Tyler goes, well, I really thought there was a couple of these you were going to get, Jeremy. Cool. Let's do this.
It's not as bad as you think. Jeremy, question number 1. The Eagles suggested how many times take it to the limit? Ian, please hit me with that tune. Well done, sir.
Yeah, I just think that in my head.
Yeah, today we're talking all about limits, Jeremy. Let's take it to the limit. Originally, I was going with April Fool's stuff, but couldn't find enough good ones. But they kept on talking about pushing it to the limit. I'm like, that's where we're going.
Yep.
Question 2. What is the limit you can contribute to your company's 401k this year? Jeremy, you said $7,500. How much are you contributing to your guideline?
I don't know. Like 15%, 20%, something. I don't know.
So 24.5 grand this year
Oh, yeah.
is the 401k. Ladies and gentlemen, start doing those deductions now if you can. If you own a business, if your clients own a business, get that money if you're an S corp, that's coming out of your reasonable compensation, replace it with profit, just checks cut every week. But man, that is the best money you can do if you've got guideline human interest or your cousin down the street doing some shady work.
Yeah, and anyone too, get it into at least to the match. Get your free money. Ugh.
Yeah. Even if you're the business owner, get that. Yeah, I have one employee that declined the 401k, and it's like, why didn't you at least take the 5% match? That's just free money.
Yeah, and I try not to judge with this too, but I've looked at as the owner, the plan owner, you can see what everybody's putting in and be like, why are you not at least I'm trying to give you more money. Ugh.
Yep. Take the free money, everyone. That's like investment 101. Free money, easily doubling it. Next question, Jeremy. What is the highest speed limit on a stretch of road in the U.S.? You said 80.
75?
There is a 40-mile stretch of road in Texas known as the Pickle Highway that is at 85 miles an hour. But other great states like Idaho, Montana, Nevada, North Dakota, Oklahoma, South Dakota, Utah, and Wyoming all hit 80 miles an hour.
That's what I thought it was, because in South Dakota, my wife went to college there and has some friends. We'd hit the border and it'd be 80, and you can get your license at 14. So you have 14-year-olds driving down the highway at 80 miles an hour. And I was like, ooh, that's a bold choice, South Dakota. Oof.
Man. All right. A few more for you, Jeremy. For calendar year 2026, what is the HSA contribution limit for family coverage? You said $2,300. I wanted to give you $1,000 window. It was $8,750 this year. And again, I want to remind everyone, this is the time of year. If you have that high deductible health plan, get that money. 401k match first, HSA, free money, tax-free, do it. And if you can, never spend it.
Yeah.
Invest it, and just let it keep growing. But there's my PSA for everyone that's listening.
Right. And when you are later in life, you can use that money for your healthcare plan or whatever when you stop getting income, right? So yeah.
I mean, right now we're sitting on so many seats, but Porter got braces. Dude, those things are expensive.
Yeah.
And I actually got a little bit giddy putting that receipt into the collection in Monarch and our HSA app saying, ooh, this is a free $3,000 we're going to be able to pull out someday when we need it. But I'm just going to let it grow for now.
Right. And also, like, our dentist it gives you a 10% discount if you pay it all right away. Like,
Yep.
Find those discounts.
Free money, man. All right, few more. What is the BAC content for the state of Utah? I was struggling with fast figures numbers to incorporate Utah. You said 0.03. We're a little bit better than that. We're 0.05.
Oh.
But Jeremy, I'm going to see you out here in Utah soon for GrowCon, along with a whole lot of our bookkeeping friend community. Who else is coming?
Who is all coming? My friend Carrie, who lives over by you. I think Kirsten. I don't think Cheryl's making it. The workflow queen herself, is she coming? Alyssa?
I believe she's coming.
Brooke?
I mean, our friends over at Double are going to be out here. It's a party and a half going down. Jaime Rodriguez is coming out here. Heidi Ryder, like really cool group of people. So if you're looking to find that community, like this entire group of misfits and ne'er-do-wells will be in Salt Lake in May. So come hang out with us. In fact, I think we have a link for $200 off eligible for the next 3 days once this drops. So come hang out with us. We'll have that. Hopefully you see this before April 1st.
Yeah.
All right. Jeremy, under FLSA, overtime generally kicks in at how many hours every week? I love when I give you a question that's such a softball, you stop and just think like, I must be missing something.
Yeah.
It's almost a fun in itself. Well done, sir.
Good.
All right. Under TSA liquid rules, what is the maximum size you can have of a liquid in a carry-on bottle? Within 1 ounce, it's 3.4.
Ooh.
Dude, are you flying soon? Because I'm terrified to go to the airport.
Just with the weights?
Yeah, TSA, man.
Yeah, that's what I've heard, that there's slow staff. I don't know. I usually try to get out. I don't get scared leaving because we have the small dinky airport where it's like 10 minutes and you're done, right? If you don't check a bag, you're in there. So I'm worried, but like it's always coming back. Like, hey, Denver, sweet. This will be a 3-hour ordeal. Ugh.
Guess who's flying out of Denver on Friday?
Ooh, ick. Where are you going?
Yeah. So we're driving out there for the kids' spring break, but me and my eldest got to get back for a doubleheader soccer game for his team on Saturday. So we're flying back late Friday night, leaving my wife and other kid there. We'll see if we get back.
Did you also know that you can take any kind of frozen liquid through TSA? So like if my wife wants Gatorade, you can freeze it and you can bring it with you and then it's fine. I had no idea.
I feel like you're setting me up to get searched.
Yes.
Like you're giving me a life hack that's ultimately going to lead to me getting pulled aside.
That's right. That would have been a good idea. I like that idea.
As of right now, Jeremy, how many CPA exam sections are there to take? You need to pass 4 in order to get your CPA, 3 required ones, and 3 more that you get to choose from to get that one extra. So actually, I hit the wrong button. So not 5, 6.
Oh.
I bring this up because my wife gave me approval once I'm done coaching soccer in May. I'm sitting for it, man. So if anyone has recommendations between those extra 3, business analytics and reporting, information systems, or tax compliance, let me know how you studied. I want to learn it all.
I'm looking at my shelf back here because I still have my CPA prep books and there's only 4. Those are ones you can take. I don't know, whatever.
Back when Jeremy was a young buck.
Yeah.
2 more, Jeremy. How many vehicles can a business have before it's required to use actual expenses? You said it so nonchalantly, but you were exactly accurate. When a business has 5 or more, they got to start doing actuals. Jeremy, does that mean they get to stop tracking mileage on those vehicles?
No, it does not. Still need to do that.
Many business owners get shocked by that one. And lastly, Jeremy, within 25%, how many possible March Madness brackets are there? You said a quintillion. The correct answer, there are 63 games, so it's 2 to the 63. That is 9.2 quintillion. But even the fact you came up with the word quintillion, I'm going to give it to you as a win there.
Nice. Yeah, I think it's I think I saw that like your odds of winning are 1 in some quintillion or something of getting the perfect bracket. Yeah, crazy.
There was some math out there, like if you did 1 a second, it would take you some lifetimes to fill out every possible bracket
Yeah.
configuration.
Ugh.
Yeah, definitely not happening. So, but as a reminder, we have our PETA, our pain in the accounting industry. Let's go with that. We have our bracket out there. So find us on Google or LinkedIn, find us on Facebook. Come play with us. Jeremy put a lot of good work into this.
Yeah, it turned out well. So I'm excited to see what wins and what comes out of this, and I think it's gonna be fun.
Jeremy, 5 out of 10. Well done. Mediocre as always.
Take it. All right, and then our winner of the week, mystery shopping visits at tax preparing firms. Did you know they did this?
So they do like secret shoppers?
Yeah, secret shoppers, and it's actually a nonprofit. The Center for Taxpayer Rights sends out people to go and test out tax preparers, and like the statistics they gave us were crazy. Let me make sure I get this. They said 56% of the 684,000 tax preparers registered with the IRS, and they said that they made 53 visits, which again isn't a great number of them, but found like rampant people not having the right credentials, because you got to be a CPA, EA, registered with the IRS, e-file tax person. I don't know.
You got to have your EFIN and PTIN and no criminal background and pay the annual fee.
Yeah, but what I was disappointed is reading this thing, they don't call out the ones that failed. Like, why wouldn't you publish that? Yeah, because I even went through the report and I was like, and it was a whole bunch of pages, and I'm like, I'm reading through all this, but like I looked and just scanned to see like, do they call these people out? Because you'd want to know, but no, they don't publish that. But make sure.
But Jeremy, I didn't even know this was an option, because honestly, if I retire and sell my firm, you know me, I love to heckle. I love shenanigans. This feels like something I would love to do, like when I'm an old man, is just go secret shop tax firms.
Yeah. Wouldn't that be fun? Fun.
I know.
All right, and loser of the week, Beyond Meat. So this is the maker of Beyond Burgers, fake meat people. Anyway, they delayed their Form 10K filing with the SEC, indicating because their auditor said they anticipating having a material weakness in its internal financial reporting related to its inventory accounting. So, not ideal there. Also, I think the main ingredient in these burgers in air quotes, is pea protein, which might be good for you, but don't ever admit that that's your main source of protein, pea protein.
I'm just happy when you put this on here, you weren't telling us that, like, hey, we found out it's really frog intestines. No. Like, I will take a misstep, because to be honest, my wife buys them and they're good, and my kids will eat them. So,
hey, if the kids eat it, that's all I need to hear.
Right?
Sign me up. Yep.
Over a regular hamburger, Luke will power down one of these guys, and it's like, cool, let's take it. So I am Team Beyond Burger.
All right, pea protein it is.
And with that, Jeremy, we are out of time. Let's make like a bad check and bounce. I'll see you next week, man.
All right.
It ain't easy. In fact, it's hard. It's downright tough growing a firm from a solopreneur to a massive team. I often get asked by people, Tyler, who mentored you? And you know what? It shows, because no one did. I made tons of mistakes on the way learning how to grow my firm from just me to the $1 million firm it is today. And so, when people ask Tyler, do you mentor or coach? I say no one should be subjected to that much of me. But what we did do is bottle up every best practice, tool, resource, template, and walkthrough that we could and package it all into what we're calling the Firm Foundation. Head over to thefirm.foundation to get access to our library of resources, tools, templates, and instructions on how you can scale your firm faster and get all the tools and resources you need to make your team successful and ultimately get yourself out of the business. Head on over, as we're releasing out how to do bookkeeping workflows, tax workflows, metrics, fractional CFO, and more. So So get on over, Firm Foundation, sign up for our next release, and we can't wait to see you there. Thanks.